I'm about to show you how to exactly only take A plus setups in trading and how you can minimize your losses. And you can see even for me throughout the past 2 weeks, I only had two trades on 19th and 27th of June, which is today. So here's the actual result. You can see it. This is break-even trades because I split my positions, and I'm showing you this because I want you to fully understand the relative trading. So without further ado, let's just jump right into the breakdown of the trade. As you can see, this is the exact London session that was occurring, and this is the only trade that I took today. And this is what was happening essentially. I was watching the market and I saw it approaching the zeros levels, right, which was strong psychological level, and I was anticipating a lot of reversal, but I was also seeing a huge continuation up, right, through an Asian session. And whenever I see this huge volume in the Asian session, usually which results in the continuation of the move. So right now, I was waiting for some sweep of the liquidity or coming close to support or resistance levels and then anticipate for the trade entries. So essentially, this is exactly what happened. We had a clear BSL, you can say, or equal lows created to on a 5-minute time frame down to 1-minute time frame. Okay. On a 5-minute time frame, we had these two equal lows, right? And if you drop down in a 1-minute time frame and you zoom in, you will see exactly this setup. So on a 1-minute time frame, we had a good setup. So this needed to be cleared. And being in the market for the first 15 minutes, we did get this clear. Now, after we got this clear, what we need to do, we needed to wait for break of the structure, change of character, or market structure shift. Break of the structure did happen, right? And then it moved up. And essentially, we did have a breaker block, right? And also a fair value gap. So both of them were aligning where we did have another fair value. We did have another fair value gap right here, right from this point to this point, right? But we were waiting for breaker block fill because breaker block and fair value gap got aligned together. So we placed our entry right here, which will be highest confluence, right? And then after we placed our trade, it moved up. We secured 1-to-1. It was right here. We secured 1-to-1. We moved the rest of the position to break even and then let it ride until 1-to-2 to the nearest support level, which would have acted as a resistance. So it would have been another 2.4, right? So essentially what happened, we just took out, we got cleared out, price went down, bounced off on these levels, which was, I believe, on 15-minute time frames, some sort of resistance, which was on 15-minute time frame close to imbalance and fair value gaps, and also order block right here, So then it just pumped up and then continued up. And also we had a news release today, so you can see after news release happened, we went up. Now, why did I not trade anything on the New York session? So on the New York session, I didn't execute even though we had this equal lows cleared. Most of you would be like, oh, we had the equal lows cleared, we're gonna execute the trade, we're gonna wait for the break of structure. Break of structure was, let's say, this one, you would consider this break of structure. I don't know why would you even consider this as a break of structure, because this was not the highest high. Highest high is actually here, and this is lowest low. So you would just execute trade right here and then result in the loss. Why? Because you were choosing poor trade. Why? Because you didn't have a checklist. And here's the checklist. Is the market in a range? In a tight range? No, it is not, because we did have a trending move and we are not in a tight range, right? So this is that already invalidating the whole setup. Now, do we have a clear BSL, SSL, or support resistant clear? Yes, we did have a BSL clear, which is close to even acted of the resistance because the 200s level right here. So we were also playing around this 200s level, which is a close psychological resistance or in support level, and you can see it was playing around this zone. We break down, we close below, we reject it again, and then price went back up and then reject it again and continued down, right? So this was the strong level which we should be avoiding a lot. And we didn't have a clear break of structure. In case price would have gone through here, up right here, then I would have considered closure above this high to be an actual break of the structure, and only then I would be looking to execute the trade. But because that didn't happen, I was patient and waiting. So what happened? Price continued melted down, and price melted down. So it kept on melting, and I just didn't execute any trade. Even this you would have considered a break of structure, but why would you consider this as a break of structure when on a higher time frame, let's say 15-minute time frame, you have so much clear in like gaps? It's such a big gap, right, in volume, which needs to be filled in most of the times, and usually the price might reverse from here or even down here. So I would just avoid this completely, and this is what I do. You can see in my checklist right here, after change of character, imbalance and fair value gap, are there any news? So what I mean by this, were there any news before, and did this result in a strong market shift? There was the news here which resulted in a strong market shift which left a lot of gaps. So essentially I do not execute any trade, so I just let it be, and this is what you should be doing too. It's okay not to take a trade, and you can see from my actual live account, which is the smallest live account that I have, which is this is my personal, it's not managed, nothing at all. I only took 4 trades. Same on my funded accounts, only 4 trades, and that's it, nothing else. You don't need to trade every single day. So you need to understand, even though it's only 0.5% gain, right? So look at this. If you were trading 100k account, right, in 2 weeks, it would have resulted 0.5% gain, $500 in 2 weeks. If you're trading max allocation of $400,000, right, multiplied by 0.05%, it's 400,000 multiplied by 0.5%, it's $2,000. So why are you trying to rush? The trading is not about flipping your account, it's about protecting the capital. And if you can trade properly $5,000 account, $500 account, and bring a good percentage returns, you can do the same with $400 account. Obviously you need to work yourself with psychology and be sure you can trade this amount of money. But in case you have practice on them and you're comfortable with trading these sort of amounts, you just don't need to rush, because that will be $2,000, and in most of the Europe, $2,000 is like more than the average salary, right? It's like, I believe 1,000 euros is average salary, right? I mean, I worked at GS, so average salary was 2k there, so same. So that's it. So you don't, like, it's okay, right? You just don't need to rush. Don't rush, stay patient. Trading isn't about hard work, it's about smart work, waiting for exact trading setup that you need to take, and avoid losses as much as possible. Maximize your win rate, that's your job. Minimize your loss and maximize the win. Like, why would you trade a strategy that has only 20% win rate? I know there are traders that do those, but I personally cannot, because I rather go to a car shop that can fix my car 80% of the times than go to a car shop that can fix my car only 20% of the time. Does this make sense? Same with trading. I rather trade in the scenarios and have a good strategy that will result in 80%, 60% or above win rate. Like my average win rate sits around 60 to 50%. So I would just do that instead of doing and trading worst case scenarios, going for insane 1 to 5 RRRs or 1 to 7 RRR. No, I will just stick to 1 to 2 and that's it. I don't need more. So in conclusion, you don't need to trade every day, you need to have a checklist. In conclusion, you don't need to trade every day, all you need to do is have a checklist, proper trading plan, and just bigger capital, and that's it. And you don't need to rush, because market is not going anywhere and hard work will not pay off here. Only smart work and patience pays off here. So if you liked the video and you found it informative, please hit a like and subscribe.